2004, there was an unexpected result of the Congress one. And as a result, the market was on the day down 7.5, nearly 8%.
Oh boy, that was something. And you said 7.5% on 2004. It was not. It actually closed circuit down for pro Modi wave. From September 2013 to the election result of May 2014, the market already went up by 26%. This is how elections played out. Even before the results came out.
Right.
So Mr. Modi has been responsible for two doublers. It's like a double century.
When you say a BJP majority by itself will not move the market, even if the BJP's numbers come down from 303 to maybe 274, that also will not move the market in your
I
opinion.
think so, but it could have there could be a knee-jerk reaction, but it will not make it won't swing for 10-15%.
Okay. The big problem comes non-majority. So let's talk about that. Hey guys, welcome to the first episode of season 2 of our podcast. Last season, we helped build a strong base of knowledge for you to become smarter investors. This season, we're going to be even better. Our videos are going to be shorter, more impactful, and more insightful. And we're here once again with our returning guest, Mr. Dipan Mehta. We're here to tackle a really interesting topic: how the markets will react because of the elections. And you've had a lot of experience in seeing how markets respond to good election results, bad election results, and non-event election results as well. So, do you want to give us a brief, of what it does, the market, how it generally responds to elections?
So, Varun, first of all, thank you for inviting me on the first show of the second season. I wish the entire Mesa Smart team a great season 2. And let's make some difference to investors in terms of their knowledge and in terms of their strategy. So coming specifically to elections, now before I go talk about the elections, there's something which we should sensitize the investors about. And there's a beautiful saying, which is that markets are slaves of earnings. So what it means is that over the long period of time, starting from 1 year to 5 years, 10 years, 15 years, 30 years, markets will move in tandem with the earnings. Now, earnings, how the growth in the earnings take place? One is, of course, there are the normal economic cycles, and then there are the elections, and a new government is formed, and then what impetus the government can give to the economy, which in turn improves the earnings. And if you see the last 10 years of the Modi government, it is all about the impetus that the government has given to private sector, more importantly, public sector, which is why earnings have grown exponentially, maybe too strong a word, over the last 10 years, and which is why markets are done as well as they are. So the importance of the election is what government comes into power and what they're able to achieve in terms of managing the economy better. And that's why I think elections are always important from markets perspective.
Okay, so you're right that elections, of course, have big impacts on the way policy plays out, and that impacts companies, which impacts earnings. But that's really the longer term impact of something like that. And the last election cycle in particular, we just had continuity in for the last large part this election cycle. Also, there's an expectation of continuity. So maybe not so much on the policy side where we're going to be expecting a lot of changes. But I kind of want to focus on the short, medium term impact of elections. And I'll try and take a couple of examples to sort of highlight that point, particularly because I want to discuss how shocks play out. So the first shock I want to talk about is in 2004. Because in 2004, there was an unexpected result of the Congress one. And as a result, the market was on the day down 7.5, nearly 8%. And even a week post the results of the election, the market was down 10%. And even 3 months post the election results, the market was still down. Conversely, in 2009, when the Congress won, again, expectedly, on the result day, the market was up 17%. And a week later, about 15%. And 3 months later, 25%. So is this because of these shocks? Do they happen because investors are trading? Is it a lot of trading activity that's driving that? Or is it just immediately investors are sort of readjusting their earnings expectations?
No, I think it's because what was expected did not turn out the way it's supposed to turn out. So let's go back because there are very interesting stories around these things which I must tell investors. Let's go back to, you said in 2000.
Why don't we start actually with 1999? Because
Okay.
that was a particularly interesting one where on results they didn't move too much. And I think that was a fairly expected BJP victory. But 3 months post results, even a week post results, you had the markets really rallying. So week post 1999, the markets were up 7.5% or so. And 3 months after the results were released, the markets were up 16%. So obviously there was positive momentum. So let's start there and then let's bring ourselves to present day.
So I think that was the time when BJP, it was very clear that BJP would in fact get to rule a full 5 years. We had Prime Minister Vajpayee take over the helm again. And it was perceived by the market and the corporate sector that BJP is always pro private sector, pro business, which is true. And therefore, I think a lot of investors got drawn to the market because they thought BJP would take the right kind of steps to boost the economy. And they, in fact, they did. And that period was also a good period for the Indian economy and for the corporate sector. But because it was largely expected, there was no major shock on the day of the result announcement or even a few weeks or a few months after that. But when you come back to 2004, oh boy, that was something. And you said 7.5% on 2004, it was not. It actually closed circuit down.
Yeah.
And then when the circuit opened, there was some mode of buying. It could be from domestic institutional investors like LIC or UTI or some other companies like that. But by and large, it was a black day. I don't know what day it was, Monday or whatever it must have been. But it was a very, I would say, disappointing day, to put it mildly. And I think the reason for that is that BJP was largely expected to get the second term. They had the India Shining campaign. We in the urban areas thought that it's a given that BJP will come to power, but they did not. It was a completely hung parliament. But Congress emerged as the largest party, and they had to seek the outside support of the communists. And that was one of the biggest bugbear for the market. That for the first time, we had a government which was totally relying on the Communist Party for their support.
And not even internal support, outside support.
Outside
The communists means that they can pull this government apart at any time.
And they could influence government policies. If Congress wanted to make some positive policies for private sector, they could influence it because if then Congress did not do it, they would just pull the support. In fact, there was a statement made by the communist leader that why should we have a disinvestment ministry? And that really spooked the market because privatization was a big factor. Privatization, disinvestment of PSU is a big investment theme from investors' perspective. So that gave an inkling into the thinking that the communists would hamper sound economic policies for the businesses. But actually, that did not happen. And the government, frankly, did almost nothing for those 5 years. But we had a superb global bull market.
Yeah.
And that's how stock prices just after hitting circuit down in 2004, from there it rallied. By 2009, it was again, those are the golden, I would say, golden period, one of the golden periods for our stock market. And a lot of infrastructure, power shares did extremely well and a great wealth creation period. I thought that was the first time that I had seen a multi-year bull market. Usually, bull market before that were 1.5 years, this will lasted for 4 or 5 years or so. So that's what happened in 2004. In 2009, we were expecting a similar hung parliament with outside support from the communists and smaller parties. But the UPA came to power by itself. So they did not need outside support of the communists. And existing parties of the UPA themselves had a majority and they were going to form a government. So the street felt that, look, now we'll have a government which really it was the Manmohan Singh government only, but really they will do something which is pro-business because they are majority in the Lok Sabha. They want to get any bills passed. They want to have a investor-friendly or a business-friendly budget that will also go through easily. And that was what caused the trigger. And look, upward circuit gets hit also because a lot of short positions get caught. So there were two upward circuits, and for the first time in the history of modern stock market in the world, mind you, modern stock market in the world, first time in the history of any stock market, you had to close the market because it hit the upper circuit. And I would say that that was 19th of May, 2009, a memorable day. And I would call that among the top 3 or 4 happiest days of my life, because I was then in front of the screen and just seeing only buys in all the counters. Oh boy, I wish we had these, cameras and we were taking a photograph.
Thanks, sir. I hope I'm still somehow somewhere number one, but it's fine. We'll let that go. We'll let that one go. So just what a serendipitous moment also for 2009 for an upper circuit, because I think just the backdrop of that 2008 crash and the huge issues of the US that were unfolding at that time. I remember it was a really dark time for the markets.
Right.
That upper circuit must have really been a breath of fresh air.
Absolutely. And it was had taken everybody by surprise. I mean, there was hardly any trading also on that day. So very low volumes. It's just that people just could buy orders, and that's how it happened. And then from thereafter, I think, things muddled along, and there were too many of these scams and scandals in the UPA to government, and people generally felt that the kind of work done by the Congress government was not up to expectation. See, every government tries to do what is best, but stock market, we are the temples of capitalism. So you want a pro-business government. What is the pro-business government? Lower taxes, easier approvals, less licensing. If there's a recession, then they will manage the economy better in terms of giving incentives to the right sectors and increase government spending. So that's how elections and government make a difference, and they can change the trajectory of earnings growth.
So let's switch now to 2014, because I think we've spoken now about 99, 2004, and 2009, and they were all sort of shockish results. I mean, 99 not so much, but if you look now, you should be able to see on screen that as a consequence of these elections, the markets reacted really wildly. But if we go to 2014, on the results day, the market was only up like 1% or something like that. Even though in the week it was not particularly up. And if you look at the chart of how the market performed in that time frame, so if we take a couple of months before and a couple of months ahead, the market was up in that time frame by 33%. But on the results day, there was really not much happening. And I presume that was because, if I remember in 2014, people expected a Modi victory and a Modi victory was delivered. So is that how that played out? Is my memory serving me correctly, or what was happening at that time?
Very interesting topic over here as well. So, contrary to popular perception, this Modi bull market started in September of 2013. Why September, Varun? September of 2013, the BJP formally announced that Narendra Modi would be the prime ministerial candidate if they came to power. Few months before that, there was a lot of expectation that Mr. Modi would be the candidate for PM, but officially declared in September 2013. That time the Nifty was around 5,500. Okay. And at the election time of 2019, the Nifty doubled. So don't go by that May 2014 election result. That was a given. In fact, BJP did better than what the street was expecting. It was a wave for pro-Modi wave. And therefore, if you go back just a few months earlier to 2013, from September 2013 to the election result of May 2014, the market already went up by 26%.
Yeah.
Right? So this is how elections played out, even before the results came out. And it doubled 2019, and then 2019 to 2024, as we speak, it has again doubled.
Right.
So Mr. Modi has been responsible for 2 doublers. It's like a double century. Ek ka do ka char. That's what really happened from September 2013 to now, about 10 and a half years or so.
Okay, interesting. So let's come to today's day. Let's maybe set the stage, because so 14, we had a nice wave up because Modi was, as you said, named the prime ministerial candidate, and then from there he won better than expected. So we had this nice move up. In 19, though, that wasn't really very much the case. If we look at what happened in 19, it was kind of flat to down. There was not really anything major going on. It was an expected victory. So what did that particular election result and that run up, did that have any impact on the market at all?
See, I think we entered the election on a positive note. Last 5 years have been spectacular. All the opinion polls had shown that BJP will come to power with absolute majority, and they would in fact improve upon their tally. And that was already built in a few months before the May 2019 verdict. So when May 2019 came, it was as expected. I would say it was better than expected. And we felt there would be continuity, and that's what really happened. In fact, the same ministers were there,
Right.
right? At the helm of affairs of the key ministries like finance ministry. And I think it was just business as usual. Right? That election, to an extent, was a bit of a non-event.
Okay, got it. So let's come to this election, and let me just provide some context for our users and set the stage. So, first of all, we're not here to provide predictions on election outcomes. That's neither of our expertise, and we're not here to do that. We're not here to comment on the politics or how the elections are going to play out. That's not what we're here for. We're here to talk about how an election result, one way or another, may or may not affect the market. So, just setting the context on how the timeline is going to play out. We have 4 more phases of polling left. The fourth phase on 13th May, the fifth phase on 20th May, the sixth phase on the 25th of May, and the final phase and voting closes on the 1st of June. So, once again, for our viewers, so we sit in Mumbai. 20th of May is the voting day for Mumbai. Please go out and vote. Every vote counts. It's important. It's very, very important that everybody goes out and vote. Whatever your phase day is, whatever you want to vote for, whoever you want to vote for, you must go and put your vote. That's the only thing I will have to say on this subject. But just coming back to what we're talking about, the last phase of polling is on the 1st June. So exit polls are going to be out presumably on the 1st of June.
Evening of 1st of June.
Evening of 1st of June. And our results are on the 4th of June. So that's the time frame in which we're going to get news, and that's the time frame ahead behind in which the market will react. So do we think that let's take a few different scenarios just to help our viewers understand how this might play out. And this is by no means a comment on the likelihood of those scenarios. Let's say BJP comes with similar numbers, stable majority, government continuity, much like in 2019. Is this just a continuity result in another non-event for the market?
It could be, because right now the street is anticipating similar kind of numbers, slightly higher for the Modi government. Of course, I think the BJP has gone and given what we call a guidance, like earnings guidance. They're given a guidance that NDA will get 400 and BJP will get 370. Now, the thing about guidance is that it gets priced in. So anything less than that could have a mild impact on the sentiment. And I think that more than ever, this election will perhaps kind of, if at all, it will have an impact on the sentiment and not so much the underlying fundamentals of the economy, because the economy is in a very strong place per se.
Right? So one thing I actually want to touch on, because this is something we spoke about expectations and earnings and how earnings drive the market's returns. Even the PSU companies, they're also, which in the last maybe 10, 15 years, they were fairly undervalued. Their valuations have also run up. So it seems like the street is expecting that continuity of government means improvement in earnings, means PSU value unlocking. So even there is no undervalued sort of companies to look at.
Yeah, that's right. But PSUs continue to surprise us in terms of their potential. And that's a separate topic, because how a good governance can make a difference to PSU is a different story altogether. We won't go into that right now. But all I can say is that, look, where is the street positioned? Let's analyze that, because that's important from an investor's perspective, and strategy can depend upon that. So right now we are factoring in, again, a Modi victory, similar type of numbers of seats in majority, maybe slightly more the merrier, more the better, of course, for the market. And if more or less in line with what they had last time, like 303 for BJP and another 30 more for the NDA put together, if the numbers are slightly higher than that, it is perfectly fine. The problem happens if the actual BJP number goes below the halfway mark.
So let's break this down into actually two scenarios. So just to summarize, at 303, which is what the BJP's numbers were, or
let's
higher,
just say that BJP majority by itself, in itself, will not move the market too much.
Okay, so I have a question here. When you say a BJP majority by itself will not move the market, even if the BJP's numbers come down from 303 to maybe 274, that also will not move the market in your
I
opinion.
think so, but it could have there could be a knee-jerk reaction, but it will not make a it won't swing for 10-15%.
Okay. The big problem comes non-majority. So let's talk about that.
So non-majority, which is I would say low probability event, but you never know. Indian voter has their own mind, and to what extent the majority is not there, that will certainly have a very drastic effect on the market on the day it's announced. So we'll get the opinion polls on Monday, 3rd of June, and the result will be out on 4th of June. 1st June is the last day.
1st June is last day.
That's
So
a Saturday.
1st June,
Saturday.
last day, yeah.
2nd June, holiday, right? So 1st June, opinion poll is out. Entire Sunday we'll be glued in front of the TV watching the opinion poll. And 3rd June, the market will react. And 4th June, counting will start. So market will have one reaction the 3rd June on the opinion polls. And 4th June by 11 o'clock, 12 o'clock, so we come to know who's in the winning position.
Yeah.
Right? So 3rd and 4th June are the most important days from market perspective. And I think that if they get less than the halfway mark, then depending on how many external parties within the India they have to rely upon, that will certainly have an impact on the sentiment. And to an extent, uh, market will perceive a weaker position for the government, and therefore they will not be able to take, I would say, big decisions,
Right.
tough decisions.
Right.
And
And
so,
that will impact long-term earning potential.
yes, that may impact long-term earnings potential, but the economy is in a very strong space. Earnings growth are decent. Fortunately for us, global economy also is gradually healing, and inflation bogey is finally, I think, gradually coming to an end. And cyclically, also global economy should do well, and that kind of will act as a good tailwind.
Interest
For
rates
the
should
market.
start to get cut through 25.
Yeah. And also, the Modi government has done a lot of things in the last 10 years, right from GST to simplifying direct taxes. They've set up the entire Aadhaar system, paid direct subsidies to the farmers. So much of capex has been undertaken. Large projects have been announced. There's a lot of sprucing up of the way PSUs are being handled. So a lot of changes have been done, and the benefits of that will accrue for the next several years, I think. So even if we have a government which is not the complete majority, I think so long as they just broadly follow the same policies that the BJP has been following, we should be fine for the next 2-3 years. But I would like to just end this part of the discussion by saying that I'm firmly convinced that whatever, if there is a sharp correction because of a bad election result, whatever the outcome may be, I think that's a buying opportunity. And if you truly believe in India and Indian entrepreneurship, then government will not matter. We started the show by saying that markets are slaves of earnings. And if you get an opportunity to buy into the market when it is down 10, 15, 20% for such a reason, then don't miss that opportunity.
I think it's fantastic, and I think maybe on that note, let's close this podcast. And just key takeaway for our viewers is that this election result is either a non-event if the Modi government comes back into power, or at best it's a buying opportunity if there's a negative shock. Right? Anything I'm missing?
You summed it up really well. And looking forward to 3rd and 4th of June, I'm not going to move anyway except for my trading terminal.
All right. Well, thank you so much for joining us. That's a wrap for the first episode of season 2, and we're very very happy to have you with us. Thank you so much.
Because I have one question. Throughout your career, which was the most spookiest election ever for you? Like you got scared, like kya hoga, kya hoga? Did that ever happen to you?
Of course, I think 2004 was really scary because the opinion polls showed that BJP would come to power, and they did not come to power. And Congress got the highest number of seats, and they had to take support from the communists. And till now, the communists, frankly, had made a mess of the Bengal economy. So we were of the fear that any influence of the communists in government policy making would be very detrimental to the stock market. So it was really spooked the market. It spooked me also. I was in US at that time and in New York, and I had to wake up in the middle of the night because the market was down circuit and had to organize some margin payments. So I was running the streets of New York trying to find a fax machine to send a fax letter to my banker.
Wow.
This podcast is produced by Elixir Equities Private Limited, a SEBI registered research analyst. Registration number INA 0000004787. The information provided in this podcast is for educational and informational purposes only and should not be considered as investment advice. Investment in securities market are subject to market risk. We strongly advise all investors to read all related documents carefully before investing.